Good morning, guys. Smash the like button. Let's get this thing going. The Fed minutes are coming out today, so it's going to be pretty boring until we get to that point. Let's go. All right, I've had a couple of good questions so far this morning. Verzi, I can't pronounce your name. Do you personally follow the magic formula philosophy for your long-term portfolio? So I follow it, not currently, but Paul and I have developed a back test that probably took us 6 months to figure out. And that is going to be our personal magic formula. So same concept, buy a box of 20 to 30 stocks, let it go for a year. But it's not actually the magic formula from the book. We've kind of devised our own, but it's exactly the same strategy. Kind of what we talked about with Seth yesterday on the show. I know some of you guys were saying that you wanted to do your own magic formula and kind of do a magic formula, then pull out the 8 pillar stocks, this and that. As long as if it works in a back test, and any value back test will work. It's just a matter of how well it works against the market over a long period of time. That's when you just got to make sure that you stick to, don't sell your stocks. You just got to stick to the 1 year thing and just keep rotating them every year. That's when you're going to do very well. So let's see. We need crypto talk from Dinosaur Mo. Is crypto a thing anymore? Let's look at this. This is the front page of Yahoo Finance. Let's see. Anything crypto related. Look, crypto just has disappeared. Where is it? Is it cybersecurity? Nope. Almost. I thought it was maybe crypto. Guys, look at this. This is the front page of Yahoo Finance. Here we go. All the way down here. Bitcoin price consolidation may be nearing end. Indicator suggests. Sick. So this is it's so funny. Look at this. I couldn't find a story that wasn't related to crypto 2 weeks ago. Now I see literally nothing. I'm just keep going. One crypto thing. Now here's one Coinbase story. Yeah, this is nuts. So that's that. All right, let's get to some news. So the point of today, we have the Fed minutes coming out. I'm assuming it's going to be 2 o'clock. That's usually when the Fed talks about things. And they're just going to basically summarize and give ideas of what is going to happen with their moving forward. So we know what happened in the June meeting. And now they're going to put their minutes out and different statements from different Fed presidents. And it's maybe going to give some kind of direction to which way things are going to go with rates and quantitative easing and so forth. So right now, futures are pretty flat except for the NASDAQ, which got a little pop. And the NASDAQ went up a little bit yesterday, even though the other markets were down. And let's see here. And also, guys, check this out. This is the yields. 3-month yield. This is up a tick. I mean, this was at 0.03, 0.04, 0.01 at one point. And look at the 10-year. The 10-year has fallen, man. This thing was at 1.6 or 1.65 back in mid-June, and now we're at 1.37. So this thing's fallen. These are starting to come close to each other, and that's when you get yield curve inversion. So let's see what's going to happen with that. And I don't know. Yield curve inversion is not a good thing. That's all I know about that. All right. Where do I want to start? Let's start with corporate debt. Where are we? We have a lot of corporate debt. So corporate debt is rising and companies have cash to spend. You know, Tim sent me a little thing the other day. It was a little graph and it just showed the corporate debt that started during I think it was Bush 1. Maybe it was, I think it was Bush 1. And then you just saw it just increasing. And the chart is really shocking. And I just don't know how it's sustainable. But hey, what do I know? Global corporate debt will increase by as much as $600 billion this year as they start to spend some of the cash piles that they accumulated during the pandemic. Companies borrowed a record $1.3 trillion last year, which left them sitting on $5.2 trillion in cash. So the argument to be made is probably these companies have tons of cash sitting on the sideline. They could dump it into the market and we can just rally higher and higher. As a result, total debt climbed 10.2% to a record $13.5 trillion for the 2020 financial year. Net debt, calculated as total debt minus cash, rose only marginally to $8.3 trillion. Marginally. Okay, cool. Let's see here. Certainly, debt has risen, but cash has soared. Markets are wide open and free cash flow is accelerating, so many companies have fair winds in their sales. So this is a great article just saying that everything's going to be fine and the market's just going to keep going higher and higher. And I'm going to get to a story on Apple here. They are just, everybody is just so, we did a reaction video yesterday, and it was basically to a business news. It was CNBC. I think they might have sprinkled in some Bloomberg and Fox Business. And when we were watching this thing, I was just looking at it. This was going back to 2008. And it showed them just high as can be on how great the markets are and how nothing can ever fall apart. And then how everything was happening. There was one comment in there. They said, it's almost 9:30. We're about 15 seconds away from market open. And we wish it wouldn't open. And it's truly incredible just to see that people just think this thing just goes up forever and forever and forever. What in the world, truly think about this, what in the whole world goes up forever and ever and ever and never stops? Here's another funny one. I'm just kind of going off in a tangent now. Nicole had a client yesterday in her spa, and she's a real estate agent. And she said that she doesn't think that this housing market is bad, and this housing market's never going to fall. This is just going to be the new status quo. And we're just going to have to get used to it, and real estate's going to stay where it is. So those of you that are looking to buy a house, maybe buy now, because maybe this is the dip. Not. Goodness gracious. People are just so euphoric, and this is when good investors capitalize in markets. Euphoric highs and depressing lows. That's when good investors can figure things out. All right, bank stocks. So if you're in the bid and ask nation, you've heard me talk about this before. Banks lead markets. It's as simple as that. Wherever the banks go, the markets go. Bank stocks have taken a dive lately as investors assume a wait-and-see approach ahead of the second quarter earnings from the space coming soon. Now, it's not only that. It also has to do a lot with interest rates and such. So here's an analyst from Goldman Sachs, I think. Goldman Sachs analyst. We continue to see further upside to the group, that's banks, given the improving the outlook for economic growth should result in higher interest rates and loan optionality being priced into the bank stocks. 2, the June rotation out of value back into growth. I just don't get it. I just really don't get it. I don't even know what they're talking. They don't even know what they're talking about. The June rotation out of value back into growth brought bank valuations to a more manageable level. So, all right. Bank stocks have averaged 34% average upside based on this bull scenario for his 2022 earnings. So let's see. Let's see what's going to happen with the banks. Of course, if you're in the Employed Trader series, you know that we have one bank in there, and it's Bank of America. And the reason is because I want to capitalize on this downside for the banks. They're just flying high, and there's no stopping them. So at some point, these things are going to turn, and it's going to be bad for the banks. And when that does happen, we are going to capitalize on it big time. Not only that, when this thing turns around to go to the upside, we're going to capitalize on that too, because banks lead them up and down. So banks are fun. Let's see here. Goldman's call arrives as bank stocks have taken a pause in recent weeks, and they kind of have, with the exception of the Fed meeting 2 weeks ago. Those things, when they mentioned that interest rates were going to climb before 2023, banks did take a little bit of a spanking, and they pretty much dropped to their 100-day moving average, and they bounced right off of it as predicted and went back up. So we're going to have to keep an eye on that 10-year treasury. That's what we're going to need to keep watching. So, all right. Let's go to mortgage applications, because this has to do with banks. and see what we got. Mortgage apps. Mortgage applications sink to their lowest level since before the pandemic hit. Supply and demand, and the supply is incredibly overpriced at this point. I mean, hey, if you're looking for a home and you got to move, you want to pay for it, sure. But man, I'm just looking at homes out there, and they are just, not only are they expensive, people are still paying. They're flying off the market. I've told the story here before. I have a friend who had a house down in Lakewood. It's a like a trendy suburb of Cleveland, West Side. He listed his house for, I think, $180,000. I think it was either 180 or 185. The first day they had 70 plus showings, 13 offers, and they sold the house for $60,000 over ask. Houses in the price range of 0 to 400,000 are selling like that. You see them pop up on Zillow or coming soon, and they're gone within a week. It's really something. So, mortgage demand fell for the second week in a row as low inventory and high home prices continue to weigh on the housing market. Mortgage applications decreased 1.8% last week. That is the lowest level since the beginning of 2020, before the coronavirus took over the economy. Mortgage applications to refinance a home dropped 2% for the week and were 8% lower than a year before. Now, I'm not too the 8% lower thing, excuse me. The 8% lower thing is not really anything for me to look at and sniff out, because frankly, when interest rates started plummeting and they took Fed interest rates to zero, and then the mortgage interest rates started to drop, there was a rush like no one's ever seen to go refinance. So when you have some extreme event like that, obviously you're not going to be able to consistently hit those numbers. And of course, when we look at any financial statement, there's a lot of companies that were throwing out 2020. They're throwing out a couple of quarters in 2020 because they're not sustainable. They're not practical. They're anomalies. This to me was an anomaly. So I'm not really too concerned with the refinance rate dropping and being 8% lower than a year ago. Home purchase applications dropped 1% for the week and came in 14% lower than a year ago. Again, same thing. Last year, there was such little supply on the market where if you wanted to buy a home or you had to buy a home, you had to go buy a home. And the fact that realtors were not working or showing homes, and people were not letting you into their homes because they were worried about cleanliness and the virus and such. What do you expect? It's an anomaly. Treasury yields have been volatile. So this is a big point. Treasury yields have been volatile despite mostly positive economic news, including last week's June jobs number report, which showed ongoing improvements in the labor market. However, rates continue to move lower, especially late in the week. The 30-year fixed rate is 11 basis points lower than the same week a year ago, but many borrowers previously refinanced at lower rates. Yes, so. Alrighty. Let's see what's next. Zotang, let me write that down. I'll just answer your question right now. And then I had a couple of others, so I'll get to those in a bit. Good morning. I want to own Apple and Microsoft shares forever. Should I just buy it and dollar cost average for years or wait for a pullback? Well, if you want to own it forever, then if you literally want to own it forever, and I don't know how old you are, then I'd just buy it. But if you're really looking to get into it as a value play, then don't buy it right now. If you want to start dollar cost averaging now, which I consider both of them overpriced, then you can do that. But if you really understand investing, in my opinion, I would start selling puts at lower prices. I'd even go a year out, 6 months out at this point, and do it that way. That's just my opinion. But if you want to hold something forever, I mean, I have to believe that the market in 20 years from now is going to be higher than it is right now. That's just what it is. Is there going to be a rough patch in there? I do believe that there will. But yeah, hope that answers your question. Let's do this Jedi deal. So this thing, people started talking about this on the live stream yesterday, and I didn't really get it. Now let's see. Pentagon cancels $10 billion Jedi cloud contract that Amazon and Microsoft were fighting over. So I thought that my impression was that Microsoft and or Amazon had the contract and it was pulled from them. That's the way that I read it in the live stream. Not true. So, because I was looking at the reaction yesterday, and I think Amazon hit all-time highs. Yeah, Amazon was up 3.5% yesterday. Microsoft was down a quarter, not even a 0.5%. So the Department of Defense announced Tuesday that it's calling off its $10 billion contract that was subject to a legal battle involving Amazon and Microsoft. It's also announcing a new contract soliciting proposals from both cloud services provided where both will likely clinch a reward. So maybe investors didn't like the current contract that was happening. What is this? It's the Joint Enterprise Defense Infrastructure. The deal has become one of the most tangled contracts for the DoD. Okay, so this is a very long article. I can post it in the Bid and Ask Nation if you guys want me to. I don't want to go through the contract. That doesn't interest me, and I don't think it interests you. But I was looking at it more from the aspect of what is happening with Amazon and what is happening with Microsoft, specifically Microsoft, because I know a lot of people are invested in Microsoft in the Bid and Ask Nation. So, all right, let's go to Apple. So, got to toot my horn a little bit here. So with Apple has, this is the great part. This is the part of the story that I love that they wrote in here because we caught it. Apple stock has caught under the radar bid over the past 4 weeks. Apple very, very quietly increased in price over the last 4 weeks. And if you look, Apple, I'm going to pull out my thing here. Let's see. We grabbed this bad boy at 136. So we grabbed this thing right here. And it was coming through the sweet spot beautifully. Let me get some drawings going on here. It was coming through the sweet spot very nicely. Volume was starting to come into the stock. It was over all 4 of its major moving averages. We grabbed it right here, and we have capitalized on this entire run up. And it is just we're crushing it. We're crushing it. What is that? 1, 2, 3, 4, 5 days, over 5%. So if you're not in the Bid and Ask Nation Employed Trader Series and you're wondering if it works, there you go. And the reason we got this, and yes, Apple was very quietly moving. It wasn't in the news, didn't do it, but it was coming through the sweet spot perfectly, and it was making these nice engulfing candlesticks. Broke out, cleared all of its moving averages, and boom, we grabbed it. So good job, guys. And I have to say good job to Cash, Nick, Caesar, and Noah. They did a great job following that and helping me out when I was in Turks and Caicos and not able to look at things. So it wasn't just me. They did a great job too. All right, so Apple stock is on fire, but will it last? That's going to be the question. Apple's it's up to $143 a share today. Let's see what the analysts say. You know, I like what analysts say. Historical track record for Apple shares is heading into the September iPhone launch event has been marked to outperform the broader market each year consistently. And that's really something. So Apple's shares have surged 13% over the past month, bringing it close to a record intraday high of $144 that happened last April. Oh, yeah. Okay. So the big thing that's going to happen to Apple coming in this September and such is going to be what role they're going to play in 5G. You guys know my opinion on 5G, but if everything plays out to get to a target price of $185 a share, he calculates it as a $3 trillion market cap. I haven't double checked that, but let's see. That's by 2022. By the end of 2022? He just says 2022. Okay, so let's see what's going to happen with Apple. It's going to be an interesting one. And yes, Noah had a baby. So Noah, he even with having a new baby, he was able to make gains in the Bid and Ask Nation. All right, China considers closing the loophole used on tech giants for the U.S. IPOs. So we spoke about this a little bit yesterday. It kind of shook markets yesterday. Let's see what we got. So China's government is actually they're saying that regulators in Beijing are planning to rule changes that would allow them to block a Chinese company from listing overseas, even if the unit selling shares in an incorporated outside of China, closing the loophole on long used by the country's tech giants, according to people familiar with the matter. I like that. They don't want their names to be out there with the communist regime. So basically what they're saying is companies that do business in the United States, let's take Alibaba for example, just because it's the one that everybody knows. They're not going to be able to be listed in the US stock market because even though they have participation, they sell in the United States, or they sell to US customers, I should say, even if they're online. So this is going to be an interesting one. What's going to happen here? The Chinese council or whatever they call it, I don't know what their Congress is called. They're going to be voting on this pretty soon, and I'm not really sure how the votes go over there. But close oversight would plug a gap that has been used for 2 decades by tech giants from Alibaba to Tencent Holding to attract foreign capital. Chinese firms have raised about $76 billion through the first-time share sales in the United States over the past decade. So that's a big number. It's a big loss. So point being, if you guys are in this stuff, be very careful, because I'm telling you, guys, you gotta have your stops in place for this. I don't know what happened with the Chinese stocks yesterday, but I imagine they got hit a little bit. But China's heightened regulatory scrutiny is echoed by tightening the U.S. recent legislation requires companies listed on the U.S. Bourses to allow inspectors to review their financial audits. China has long resisted letting U.S. Public Company Accounting Oversight Board examine the audits of those firms whose shares are traded in America, citing national security interests. Well, no comment. No comment. I'm sure those of you that know me can figure out my comment. All right. Gold climbs as bond yields lower. So gold climbed past $1,800 an ounce as Treasury yields declined ahead of the Fed notes today. So keep an eye on the yields. Keep an eye on everything, guys. If you're gonna invest in gold, please invest in gold. Don't go trading gold. I don't like the gaps and up and down and this and that. It's so globalized. It's not only determinant on what happens in the United States. Yes, the U.S. plays a big deal in it. Absolutely, massive economy. A lot of gold being purchased in the United States. But let's just be careful with it. If you're gonna invest in gold, I personally think now is a fine time to invest in gold. I have a massive position in gold, and I've had it for over a year. And I'm going to keep it, and I'm going to keep it for the next 3 to 5 years, depending on the situation. So that is that. Let's go to check this out real quick, and then I'm going to get to some of your stocks, and we will roll from there. So this is the Everything Money Patreon, patreon.com/everythingmoney. If you want to join the Bid and Ask Nation, if you want to be a part of that Employed Trader series, if you want to make gains on Apple while nobody else is, unless you're in it for a value play, because there's nobody that caught that trade. Nobody caught that trade. You would be hearing about everybody that caught the trade. Bid and Ask Nation, $68 a month, includes that great Discord chat, includes all of the Everything Money software. If you just want the software, $24 a month gets you into the Discord as well, just not as exclusive. You get access to almost every channel here. The only ones you don't get are Paul's Super Shorts. And if you want to talk to Paul about a real estate deal, 10 G's will get you that. And if you're buying a deal in this market, you might want to do that. So, all right, I want to do Cisco first for Susie, because she donated. And I think the donation this week, if I remember correctly, goes to the Akron Children's Art Museum. I think that's what it is. All right, so let's see. I'm assuming her reasoning for wanting to look at this one, I'm just going to guess, is it's doing this little sweet spot reversal, possibly. We're going to see. The reason it's just kind of stuck in this range, and if you kind of just draw these lines right here, it's just been stuck. And if you go over here and do the same thing, look what you got. You have your yellow line and your purple line. That's your 50-day and 25-day moving average, respectively. So it's just kind of hovering right there. You're not going to get any movement to one direction or the other unless you break up here or you break down here. And if you break down here, you're going to be halted at $51. If you break up here, you got to contest with your all-time highs. So with this one, you just got to be patient. If this thing does start to move up in the sweet spot, let it break over this 53.50 area, and you can go ahead and maybe put a position on there. But right now, Susie, I wouldn't do anything. I'm going to do Oxy for, I think his name was Jonas. Oh, yeah, there he is, Jonas. So here you go. Here's your Oxy deal. He wanted me to talk about oil a little bit. Guys, I don't know about... Anybody that says that they know about oil, I just don't believe it. Akron Children's Museum. Thank you. Any donation goes to the Akron Children's Museum. I was very close. All right. So with oil, guys, I've told the story. I'll tell it again. I was listening to the radio one time back in the day. I was driving, and they said that a bird flew into a refinery, and that's why gas prices were up that week. I mean, who knows with oil? It's so geopolitical anymore. You have OPEC, you have the Saudis, you have this, you have that. I can't get a good gauge on a direction of oil, coupled with I don't really understand commodities that well. So the fact that it's very geopolitical, very commodity based, I struggle with that. But to trade it from a chart perspective, absolutely. Let's see. Let me go. Let's look at all. Okay, so you definitely have a 50%er here. But it's not surprising. Oil basically went to $0 a barrel. Actually, it was negative $40 a barrel. So you have this overhang here, Jonas. And this is where you're struggling to get through. See, you tried to break through once, couldn't do it. Tried to break through again, couldn't do it. And here's your stock price today. The good news is you're hanging over this 50-day moving average. I mean, 25-day moving average. So if I'm you, I am being very cautious with this. I'm not doing anything unless I can break above this high right here, something like that. But even then, you saw the 50% rule that I drew, and that is going to be it's going to be a tough one for you. So, give me a couple more stocks. Starbucks. Let's look at Starbucks. Starbucks. I really like Starbucks. I like companies like Starbucks, McDonald's, anything that has to do with kind of that quote unquote fast food area. I like those kind of companies during times like this when there's a lot of stimulus and money going out to people, just because when you have extra money in your pocket, what do? You go spend it at places like this. Even if you go shopping, you stop somewhere on the way. That's why I kind of like looking at those kind of companies during times like this. So Starbucks has had a hell of a run. Right now, your moving averages, that's wonderful. Let's see here. Okay. So if you break above 116, if you like that, I think you can go ahead and add to Starbucks. Just know that when you get up to this 118, 119, whatever that is, you're going to be taking profits. Not selling, just taking profits. But if you can engulf out today and make a nice move over this 116, I think you'll do very well with that. VUZI. Captain Car. Let's see what we got here. All right. Let me zoom out just back here just to make sure. Oh, wow. That is a wild chart. Let's do 3 months. Okay. So coming through the sweet spot nicely. I'm sure you know this. You're contesting with 3 moving averages right here. So it's going to be hard for you to break out. And you just have a ton of resistance pushing down on you at basically $20. So unless you can get some really good volume, this is not good volume. You need good volume and just start moving up in price. To me, I think you have to break out above these moving averages. Most importantly, the 100-day moving average, and you will do well. But you got to get over that 100-day moving average. All right, Tattooed Chef. What does this company do again? Is it fake meat or chef clothing? I'm just kidding about the chef clothing part. All right. So you're sitting right at the 200-day moving average. Just sitting. You're literally sitting right there. This is certainly more of a short, but even with that, I don't like the short because you're sitting at the 200, then you have to go to the 100, then you go to the 50. It's just, you have a lot of support. In my opinion, unless you can break out up over the 25-day moving average, I'm not touching this thing. From a long-term perspective, I should say. Oh, Clorox isn't this used to be disruptive. I don't know if it is anymore. All right. Okay. And guys, the reason I'm zooming out like this to see this long-term chart is because I want to see if we're hitting any 50 percenters, and I'm glad I zoomed out on Oxy just to see that. Okay, market's open. So coming through the sweet spot nicely. Issue is you're going right into the 100-day moving average. So if you can make good engulfing candlesticks and break out over that 100-day, you're going to do very well with this thing. So, all right, guys, that's it for today. Let's see what the market's doing before I go. Let's see. Everything's pretty much flat. Nasdaq's getting a little bit of a pump. Nasdaq got a good pump yesterday too, and I have to think what's the Nasdaq's all-time highs. Let's see what the Nasdaq hit all-time highs last week, didn't it? Where's the range? Historical data. High 18. Yeah, so it's coming really close to its all-time highs, which okay, it set a new high yesterday, so it's getting there. But all right, guys, have a great day. We'll put out some videos today, and of course, tomorrow, Patreon only live stream at 2 p.m. It's going to be me and Paul. Seth is going on vacation, and I will see you guys tomorrow morning at 9 a.m. Smash the like button on your way out. Follow me on Instagram, TraderMo_EM. Follow Paul on Instagram, @PaulGabriel. Peace.